So your refund can still be high. Or if it's not the case, your refund would definitely be lower. So that's really a few of the reasons why many of you are going to be shocked, thrown back, taken aback, beat up, disturbed, might be crying in your feelings. Hey guys, welcome to the Money Zone. I'm your host, Falasha Day, the Accountability Accountant Guys, and I am just so excited and so blessed to be here with you guys on this amazing Tuesday, y'all. So on today's episode of the Money Zone, we're talking about everything student loans and your taxes, y'all. Student loans and your. So why are we having that discussion? Because the U.S. economy have about $3.6 trillion worth of student loan debt. That is a major concern for society right now and on the economics of everything. And it's up in the air. Everybody keeps saying he's going to forgive $5 billion in student loans. Biden is going to forgive this in student loans and this, and it. Okay, it's a lot going on. So we're going to talk about all of that stuff in tonight's episode, guys. So I know we had a little bit of technical, well, y'all probably did know, but we had a little bit of technical difficulty. So I'm running maybe like 1 or 2 minutes late. But what we're going to do, we're going to take our regular break to give me some time to get myself together. And you guys are going to grab your pen and grab your paper and share the video. If you're watching us on YouTube, please share the YouTube video. If you're watching us on social media, share the video with your friends, someone that you know that have student debt. Student loan debt, and let them know Falashade is talking about student loans, girl. You need to be tuning in. If you're watching us on RipRadioNetwork.com or Rip Radio TV, then definitely share with a colleague. That's all I ask you guys is to share the content so we can make the impact that me and my team desire to help change your financial house. So guys, we're going to take a quick little break and we'll be right back. And welcome back to the Money Zone. I'm your host, Falashade, the accountability accountant. And on today's episode, guys, we are talking about student loans and your taxes. So if you wasn't tuned in throughout the introduction, I was basically giving you guys some background as to why am I having this discussion today. Well, first of all, because the U.S. have about $3.6 trillion in student loans. And also, I know many of you wonder what are some of the benefits what are some of the pros and what are some of the cons on your return when it's related to student loans. And you're also trying to figure out how to maximize your student loan deduction. Okay. So that's what we're all going to talk about in tonight's episode of the Money Zone. So if you're just tuning in, please. If you're watching us on any social media platforms, please share the video as well. And grab your pen and your paper. Okay, so first things first. Not everybody has it. I was about to start off singing, talking about everybody has student loan. But no, not everybody has student loan, okay? However, the individuals that have student loans, which I am, okay, I didn't get to go to college student loan free, lucky all of you. But if you have student loans, there are certain tax benefits, such as the student loan interest deduction, and or if you're presently in school, you may be able to write off your school fees. Guys, give me 1 second. And this microphone. Why did I have to leave, Bryce? I should not have to do this. You already know we do the show every Tuesday. Sorry, guys. Interruption. Okay. So, all right. So right now, many of you are wondering, like, oh my gosh, a recession is coming. What to do? Are you getting tax benefits? It's just so much going on. So let me just take a step back. First things first. Right now, many of you may not even be paying your student loans because when COVID hit, when the pandemic hit, Biden actually ceased and suspended all federal student loans. And also some private loans was also included in that. So many of you, for the past maybe 2 years or so, you have not been required to pay your student loans. Then some of you that made a killing, you probably paid extra and everything, so you were able to pay some of your student loans. So here's the jiffy. If you were unable to pay your student loans, then that means they either deferred it for a while, okay, and you didn't get, well, because you didn't pay your student loans, you didn't receive or get the opportunity to take advantage of the student loan interest deduction. So the student loan interest deduction is up to $2,500, okay? That's the max, okay, per person, up to $2,500 that you're able to get. However, you had to have spent at a minimum of at least $2,500 in student loan interest, not the principal, the interest. And a lot of people don't have that much interest that they pay throughout the year. So most individuals may never really fully qualify for the maximum amount for the student loan interest. So if you were able to pay it, make sure when you guys go and file your tax returns that you end up giving your preparer, hopefully me, your 1098, okay? Your 1098E. I think that's, 1098E for student loan interest. So you will give them that. If you have not been able to pay your student loans, right? No jiffy. The only thing you did miss was the student loan interest deduction, okay? So, and that's the max. And a lot of individuals, have I really seen? I've seen some clients have $2,500 worth of student loan interest if they have high interest, or if they're really, really high income earners, they'll pay a large amount to reduce the student loans. But the average person, I normally see between $300 to maybe $1,500 in student loan interest. So why is that important to you? That is a tax deduction that I don't want you guys to miss. Since you have not been possibly paying for the past 2 years, it's not in your rhythm or in your routine to, one, pay your student loans, and two, to collect that year-end statement. So write that down, that you need to make sure, since you're starting to repay your student loans, that you end up collecting your year-end statement so you can now deduct your student loan interest. Okay, that's number one. Number two, if you are presently in school, remember your student loan was for you to attend school. And I get this all the time. And when I was in undergrad and when I was in graduate studies, right? People would say, oh, you're able to deduct your school fees while you're in college? I know a lot of you right now, you're probably looking at the screen or hearing the podcast if you watch the show afterwards, right? You're probably like, what do you mean, Falashe? A lot of people that are presently attending college or in prior years, okay, do not know that, yes, you can deduct your school fees, your tuition, and things like that, and also have the student loan interest deduction. Or if you're not paying back your student loans, presently while you're in college, you should be taking advantage of the American Opportunity Tax Credit. Okay, and you should also be taking advantage. 1 second. Because, see, this is the thing, guys. Remember, I was telling you guys the tax system, and this is why they consider the tax system to be voluntary, because you can be lazy and voluntarily don't give your accountant or give me your student loan interest deduction sheet, right? At the end of the year. So you voluntarily left off your student loan interest. The IRS don't care if you don't claim your student loan interest. That is how the tax system has been well, that's the real concept of why the tax system is considered voluntary. Not the fact that you can go and not file a tax return when you know you made 50,000, 100,000, millions of dollars, okay? It's because you can voluntarily claim or not claim some deductions that you are allowed to take. And one of those deductions is the student loan interest deduction that a lot of individuals miss out. And so the second thing is that, yes, while you guys are in school, you want to make sure you get your 1098T for tuition, okay, from your university. So you can now either have your children, if you have college bound children, or college age children, you want to ask them at the end of the year, did your school send you an end of the year tax statement? Because a lot of these kids don't even pay attention, y'all, and won't send it to you. And then I either going to send you back because I'm asking you whether or not your kid is in college. And see, this is why it pays to work with the professional rather than TurboTax. Because the TurboTax is not going to say, hey, go back and get your child's tuition statement from this place. Go back and ask for this tuition statement from this place. They're not going to send you back. This is why it pays and you end up saving when you work with the right tax professional because of situations just like that. So the tax system is voluntary. We talked about that. And we talked about that you don't have to take the credits if you don't want to, okay? The issue is that you don't want to leave that money on the table. Then I went on to tell you guys that a lot of you may not even thought about it, or people you know have not been taking advantage of the school fees credit, okay? Because they thought because they were paying student loans, they received a loan. And see, that's the other perception. It is, oh, well, I'm not paying for the tuition out of pocket. I'm paying for the tuition through a loan. And most people don't believe that when you're paying your tuition through a student loan, you still have the right to claim your tuition and get the American Opportunity Tax Credit and any other educational tax credits. So make sure, and the reason why I'm discussing that is because you go to school to get an education. So I want to make sure you are deducting your education fees and also you are deducting your student loans as well. Okay. That is very, very, very important. And see, right now, the reason why we're having this discussion as well is because tax season is over with, right? April 15th has come and gone. However, if you want to maximize your taxes for next year, you want to start tax planning right now. Right now, me and my team are reviewing all of our client stuff and I'm tax planning. I'm doing a lot of consults with people doing tax planning. This is the time to really see what tax credits you qualify, what deductions you're able to take, what business expenses you're able to write off, okay, and what you need to do if you need to be, if you're eligible to contribute to your Roth, should you get a traditional IRA, guys, this is the time to really have those intimate conversations with your accountant because this is the time to start tax planning, and every little thing helps. See, and this is why I'm telling you guys about the student loan interest because if you're able to take the maximum $2,500, right? That means you will now reduce your income dollar for dollar by the student loan interest deduction. So if your student loan interest deduction is $2,500, right? Then you're able to now take your, let's just start with a small number, your $5,000 of business income, and then you will then subtract out the student loan interest deduction of $2,500, leaves you with taxable income of $2,500. So that means if your tax bill was $5,000, let's say if your business income left over was $5,000, the student loan deduction will slash it 50% if you paid the maximum to qualify for the maximum deduction. So in that case, you probably saved several hundreds and hundreds of dollars on your taxes because you kept up with your paperwork, number one. Number two, you paid your student loan interest throughout the year. And three, you voluntarily decided to maximize your tax deductions, student loan deduction. Okay? Guys, you don't want to miss out on those little things, and you want to get yourself into a habit, because what I'm noticing is that when a client missed a deduction for 1 year, they'll be like, oh, Falashade, I'm not going to worry about it this year. Miss Falashade, I'm not going to worry about it this year, girl. I'll do it next year. And then fast forward next year, they send the same thing. And I'm like, doop, 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 doop. Okay, well, do you know you could have saved about $5,000? And then when they get in a client, get in a tough situation, then they'll be like, oh, well, I want to make sure I take that deduction now. Make it seem like you ain't do what you're supposed to be doing in advising, but because they get into the whole tight situation, they're sitting there trying to make sure they get everything. That's not how it works, guys. You want to plan accordingly. You want to plan for all of your tax deductions. And even if it's $2,500, even if it's only $300, take advantage of it, because when they start taking these deductions away, okay, then you're going to be crying saying the IRS, you know, Uncle Sam is shady, want all of your money. Yes, he do, right? But the reality is that we have to maximize what opportunities they give us, and they give us quite a bit. Okay, they're giving you the student loan deduction, plus you're able to take your tuition for your schools if it's a qualifying school, and that's another thing too, guys. You can't take student loan interest deduction for just any old online class or anything like that. And somebody had asked me that, well, can I take the student loan deduction just for any, for the one of the online classes that I took? No, it has to fit certain parameters. Okay. So make sure before you just go into invest into a school or class and you're trying to take advantage of the tax credits, that you look to make sure that the school fits the criteria, and the curriculum and the program that you're entering into also fit the requirements as well, guys. Okay. So you want to make sure you do that. And then your student loans, if you're paying that, make sure you try to deduct that. Okay, guys, so we're about a few minutes before we go into segment 2. So I don't want to go and deep dive into this, but in segment 2, I'm going to talk about who qualified for student loan forgiveness. What are some tax strategies? And I know this is what you guys been waiting for. What are some tax strategies around student loans? Yeah, we're going to go a bit further. Remember, always hang in there, guys, when you're watching the Money Zone, because segment 1, I think I just ramble, but I give y'all some good stuff regardless, right? But segment 2, we go into practicality, action steps. I give you guys exactly what you need to be able to do. So in segment 2, we're going to talk about student loan forgiveness, tax strategies, and things like that. Okay. So what we're going to do, we're going to take a quick little intermittent break, and we'll be right back. Hey guys, welcome back to the Money Zone. I'm your host, Falashade, the Accountability Accountant, guys. And if you are just tuning in into tonight's episode, we're talking about all things student loan and your taxes. So in segment one, I was just giving you guys some background information regarding student loans and things like that. We were just on the surface level talking about the forms, what you guys need to do. If you haven't been paying, don't expect to be able to take the deduction. But if you have been paying, you're able to take the deduction and so forth and so forth. So now we're in segment two, and we're going to talk about the pros and cons around the student loans and getting your student loans forgiving, getting your student loans discharged, and what are the ramifications, well, the tax ramifications behind all of it. Okay. So first things first, I'm going to share my screen, guys, and we're going to go through the various types of forgiveness programs. And if you guys did not know, there are a lot of forgiveness programs. I'm exaggerating. Is it a lot? It's about 5 different programs. Let me make sure. No, that's not the one. The next one. It's about maybe 7 programs, maybe 7 or 8 programs, and that many of you might qualify for, guys. You just have to kind of look into it. Okay. So first things first, everybody know of this teacher student loan forgiveness. I think that's the first one on the list. Okay, no. The first one on the list, guys, and if you want to see my screen, you want to head over to Facebook Rip Radio Network, or you head over to YouTube as well. Yeah, so the first type of student loan forgiveness is the public service loan forgiveness. It says if you are employed by a government or not-for-profit organization, you may be able to receive loan forgiveness under the Public Service Loan Forgiveness Program. The Public Service Loan Forgiveness forgives the remaining balance on your direct loans after you have made 120 qualifying monthly payments under a qualifying repayment plan. 12, 24. How much is that? That's what, 10 years. So within 10 years, if you work in the government sector or a not-for-profit organization, you may qualify for the public service loan forgiveness. Okay. And the beauty of it, if you guys qualify for any of the forgiveness programs directly issued by the federal level, then the forgiveness part is not considered income. Okay. So if you are a teacher, you can also get your loan forgiveness. And it says if you teach full-time for 5 complete and consecutive academic years in a low-income elementary school, secondary school, or educational service agency, you may be eligible for forgiveness of up to $17,000, well, $17,500 on your direct loan or FFEL program. And see, guys, look, this can be a strategy. Let's say, for example, you don't want to pay back the student loans and you want to try to get forgiveness, right? Why won't you just go to another school that qualifies for the low income elementary school or low income secondary school, whatever, that fit the requirements, right? And work your 5 years there. Or we'll say it's 5 consecutive. Yeah, work your 5 years there, apply for your teacher loan forgiveness, and then go to the school that you desire or end up staying there. But that can be a strategy so you won't have to use your present money, guys, to get your student loans forgiven. Okay. Also, we have the closed school discharge. I think a lot of you have experienced it. I don't know if it was DeVry or one of those schools where what was that popular school? Was it DeVry? I think may have been DeVry, but it was another school. That whole school closed. So everybody that had that student loan, y'all, they ended up getting their loans discharged. So if you've attended a school that all of a sudden closed, but you still had to pay on the loans, then you may qualify for the closed school discharge program. They also have the Perkins loan cancellation discharge. It says you may be eligible to have all or a portion of your Perkins loans canceled based on your employment or volunteer service, or discharge under certain conditions. Okay, so you guys want to look into that. If you are totally or permanently disabled, guys, you possibly can get your loan discharged as well. Also, I don't really want to mention this, but you can also get your student loans discharged due to death. Due to death. Okay. And then also you can get your loans discharged in bankruptcy, and they have in parentheses on the federal student aid in rare cases, right? They say in some cases you can have your federal student loans discharged after declaring bankruptcy. However, discharge in bankruptcy is not an automatic process, okay? And it's like three more left. Borrow with defense repayment, okay? The false certification discharge, the unpaid refund discharge, the forgery discharge, okay, and then the eligibility. And I know a lot of you, for parents, are concerned about this one. Eligibility for parent borrowers. As with loans made to students, a parent plus can be discharged if you die. If you not the student on whose behalf you obtain the loan become totally and permanently disabled, or if your loan is discharged in bankruptcy, your parent plus loan may also be discharged. Okay, so whatever may happen to the student, mom and dad, make sure don't just start make the payments, but also look at opportunities for you guys to have your loans either discharged or have your loans forgiven. Okay, now here's the issue, guys. There's a total difference between a student loan being discharged and a student loan be forgiven. Okay. So in most cases, when the student loan has been forgiven on a federal level, then it's not going to incur or become taxable income. However, in majority of the cases, if a student loan is discharged, right? And I'm trying to find my little thing. If the student loan is discharged, right, then it can be considered taxable income. And a lot of people are surprised about that. So let's say, for example, your student loans is $50,000 and you ended up getting your loans discharged for $30,000. That means you don't have to pay back $20,000, right? So that $20,000, you will more than likely receive a 1099-C cancellation of debt for the student loan portion that was discharged. I'm going to repeat that again. Some of you that may not qualify for your loan to be forgiven may end up having your loans discharged. And depending on the circumstances of your loans being discharged, which the majority of discharged loans, right, would be considered taxable income, meaning you will have to pay taxes on the amount that they have discharged or allowed you to walk away from. So if your student loans was $50,000, they discharged $20,000, then you have to pay taxes on the $20,000 that they discharged. Now, there is a way around that. If I should tell y'all, I think I'm gonna tell y'all. Alrighty. So one way around avoiding paying taxes, I can't say avoid it being taxable income because you can't avoid it being taxable income. But what you could do is avoid that money's being taxed. You will end up making sure or seeing if you qualify for the insolvency clause. Meaning, if you're insolvent, meaning you have more debt. But see, Black people, hear me out. Hey, where my family at? Hey, Black folks. I'm not being shady right now. I'm giving us opportunity. The majority of us have debt, right? The majority of us have more liabilities than asset. Let me just be honest. Why not use our pain and suffering to benefit us for tax purposes. It's a lot of things that you guys are paying taxes on that you don't have to because you're insolvent, meaning you have more debt than you have assets. So, for example, the student loans. A lot of you some of you have or know someone that have lost their home. Same thing. Some people have hundreds and hundreds of thousands of dollars in debt, tax debt, because whoever they went to prepare their taxes with didn't know the insolvency clause. Now, it's not straightforward. It's not something that everybody can do. It is multiple publications, well, it's multiple worksheets and schedules that may correlate, and you may have to read to get the certain numbers to pull together, right? But if you're working with a tax professional like myself that is pretty knowledgeable in situations like this, then guess what? A lot of you have left or paid taxes on money that you didn't have to. So why not use the system the way you're supposed to? Truth be told, the reality is because most Black people have more debt than, now I'm not encouraging you guys to do this, but now my brain is ticking. Because the average Black person have more debt than assets, it might be in our best interest to get our student loans discharged. It's off of our credit. You file your tax return. If it's done right, you don't even pay taxes on that money, and you walk away student loan debt free. You heard that first here on Money Zone per usual. But yeah, so that's what I think you guys should definitely do. If you have a lot of student loans, look at what your options are. Okay. See if you qualify for any of the forgiveness programs first. Don't just go right into the discharge programs. Don't just go right into the discharge programs. Look to see if you can qualify for any forgiveness programs. And let's set up a plan. Now, your discharge program might be doing the teacher one. Set it up. Think about it. 5-year plan. In 5 years, I'll be debt free. Since I don't have to pay my student loans, I'll put more money to my mortgage. Like, come on, y'all. Let's start really being strategic right now on how we could do things. We strategic about everything else. Let's be strategic about the money game out here. Okay? Use the tax system the way the tax system wants you to use it. Okay? If you have student loans, don't just run to anybody or try to file your tax returns. If you were able to get your loans discharged, don't just do that. I told you guys that there's a clause out there. But don't be trying to take it from the Money Zone, from Falashade, and think that every Joe Smo is going to be able to do it. You're going to be devastated. A lot of you also have other sources of income that could also be reduced from, based on that clause as well. But guess what? I'm not even going to give y'all the rest of that. That'll be another show. But be strategic. Think about what I said in tonight's show. If you can get your loans discharged and you know you have more debt than you have in assets, and that's when we have to be honest. And this is where sometimes being in your bad financial situation might be a come up. You know how to say you're already at the bottom and ain't nowhere else to go? You're already at the bottom. You already got student loan debt. And y'all not alone. I got student loan debt too, y'all. I got student loan debt too. But I got a strategy. Do y'all got a strategy? I got my strategy. I know what my repayment plan look like. I know how I'm going to get my loans discharged and forgiven. I know what I'm going to do. I've already looked at the programs I can potentially qualify for. Prime example. Y'all forgot my Black professional. Let me tell you how y'all accounting think. My Black professionals of Prince George's County, nonprofit. How long have I been operating it? So it's been operational since 2018, but I just became a nonprofit in 2022. So what I tell you about one of them programs, 5 years or 10 years, nonprofit. Yeah. So you guys have to have your strategy too when it comes down to the student loans, because the tax system, and this is why it pays to work with professionals. Because you probably did not even think about nothing that I ever said tonight. And your tax professional never said nothing about this. And some of you, probably you or your family member, have gotten their student loans discharged and went to file their taxes and owed a lot of money. And now, by you watching tonight's show, you're thinking like, holy cow, they didn't even owe that money. They could have qualified for this, like Falashade said. So, better late than ever, guys, okay? Better late than ever. All right, so let me move on. So we just talked about student loans being discharged. We talked about the student loan deduction on the tax return, okay? All right, and then I am actually going to share my screen and we're going to look at the IRS site. And remember, guys, when I show you guys IRS references, just be mindful, and I've mentioned this before, if it's not the U.S. tax code, I don't use this to back up none of my claims if my clients was to get audited or anything. So I don't use what I'm about to show you guys to back up whatever claims on the tax return. So when you guys go to try to figure out stuff, if you can claim this, what deductions that you can take, just be mindful that these publications and the IRS website are not considered source references. Okay, so you can't just say, oh, well, it says here on topic number 431 cancel debt that this, and then the tax court is going to say, well, we don't use that as precedence, or we don't use that to back up information. Okay, so once again, guys, if you're on Instagram or any other social media platform and you cannot see my screen, you want to head over to YouTube at RIP Radio Network, okay, or head over to RIP Radio Network on Facebook as well, or with ripradionetwork.com. Okay, so right now we're looking to see if the cancel debt is taxable. So it says if you borrow money and are legally obligated to repay a fixed or determinable amount at a future date, you have a debt. Okay, you may be personally liable for a debt or may own a property that's subject to a debt. If your debt is forgiven or discharged for less than the full amount you owe, the debt is considered canceled in the amount that you don't have to pay. The law provides, and see, guys, I've already told all of you guys this, we're just reassuring ourselves, right? The law provides several exceptions, however, in which the amount you don't have to pay isn't canceled debt. These exceptions will be discussed later. Cancellation of debt may occur if the creditor can't collect or gives up on collecting the amount you are obligated to pay. And this is student loan, this is your mortgage, this is your car, this is credit cards. Honestly, y'all, this can even be a personal loan if they have the legal paperwork or everything as well. So be mindful, any type of debt obligation, you could receive a 1099-C, okay? Where else did I leave? Or if they give up on collecting the amount you're obligated to pay. If you own the property subject to debt, cancellation of debt also may occur because of a foreclosure, a repossession, or a voluntary transfer of the property to the lender. So even if you foreclose, you're going to have the same form. So remember I told you guys 1099-C if you get your debt canceled, and that's student loan debt, mortgage, car, credit card debt, all of that, you will receive a 1099-C, okay? It says in general, if you have cancellation of debt income because your debt is canceled, forgiven, or discharged for less than the amount you must pay, the amount of the canceled debt is taxable. Remember, I just said that. And you must report the canceled debt on your tax return for the year the cancellation occurred. So if Wells Fargo canceled your debt in 2022, when you go to file your 2022 tax return, it needs to be there. If the IRS received that 1099-C and it's not there, guys, you will get a notice. Okay? All right, so here's exceptions. It says amounts canceled as gifts, and I'm not going to read all of them, okay? Certain qualified student loans. See, this is why I said y'all need to make sure you're just not just winging all of this stuff and trying to do everything on your own. Certain qualified student loans canceled under the loan provisions that the loans will be canceled if you work for a certain period. So remember those forgiveness, those loans that were forgiven, they are the exception. So that's why I said you guys want to make sure you try to get your loans forgiven first before discharged, okay? And this is just for tax purposes, guys. We're not talking about credit purposes. So if you're just coming into the show, we're not talking about getting a loan forgiven and discharged for credit purposes and all of that. I don't have time for none of y'all to be posting me or messaging me talking about, Felicia, they rather get a That's not what I'm talking about. I'm talking about the ramifications of canceled debt, cancel student loan, cancel credit cards, cancel all of that on their tax return, not on their credit report. Okay, disclaimer. Alrighty, so then last but not least, amounts of canceled debt that will be deductible if you, as a cash basis taxpayer, a qualified purchase price reduction, and any amounts discharged from certain federal, private, or educational purposes. Now, here is where I said that exclusion that I was telling you guys about. Here's exclusions from gross income. It says debt canceled in Title 11 bankruptcy case, debt canceled to the extent insolvent. Okay, so you guys heard it first here on the Money Zone. Be strategic. And when I'm really, 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 truly thinking about it, this is probably what y'all been paying people to try to do for y'all. And I think they probably screwed y'all up on the tax part. I'm trying to connect the dots now, because one of them student loan doctors ended up getting a federal trade case or something like that, y'all, where they was saying that they can get your student loans discharged and all that stuff from your credit report and all of that stuff. And I'm just trying to think about all of the people that ended up getting their student loans discharged. Did they end up getting hit with massive taxes because they didn't file their taxes properly, or have a professional like myself file their taxes? So if you know of someone that have recently had their student loans forgiven, or their student loans discharged, or any type of debt discharge, please tell them do not try to do a DIY tax program. They need to work with a tax professional because there's so many benefits. Like, I'm even getting excited even thinking about all of the people that may end up not having to pay back student loans, not having any tax impact because they were successfully able to get their loans discharged and had a sufficient tax pro like myself. Make sure they qualify for everything that they supposed to, such as what we talked about. I'm not gonna say it again, what we talked about in tonight's show. So make sure if you're just coming in, you watch the replay on ripradionetwork.com or on YouTube, or catch the podcast within about maybe 48 hours from tonight's show on everywhere podcast is housed. Guys, if you're interested in promoting your company and getting your business out there, definitely go to bit.ly/Felicia Radio so I can help promote your business. And then lastly, guys, if you want for me to talk about any particular topics, or if you want me to have any guests coming on the show, and I don't even know, am I having a show next week? My birthday is next week. So I need to confirm with my team if we're even having a show, which, truth be told, y'all, I don't want to be here on my show on the Money Zone. I don't want to do the show on my birthday. So if you guys don't see me next week, you guys will see me the following week. And I think we have JT with Pocket Watching with JT coming on from YouTube. He's coming on the Money Zone. I think it's the 28th, guys. So if you don't see me next week, you will see me the following week. And from my knowledge, I think he confirmed JT will be on the show the 28th of June. So you guys don't want to miss out on that episode. Catch the replay, because I dropped some major game, major plays, major knowledge. And if you've already filed your returns and had your student loans discharged, you might it might be in your best interest to talk with a legitimate tax professional. So you may want to get your tax returns amended and corrected. Okay, so that's a wrap. Make sure you tune in next week or the following week. Have a good night, guys. Bye-bye.